Welcome to Industry Vancouver, conversations about the residential real estate industry with Andrew Hasman and Jeff Bennett.
Andrew, good morning.
Happy New Year, buddy. How you doing?
Hey, feeling really good, actually. I got to work yesterday, which I came to my desk, and I thought, oh, wow, I haven't been here for a little while. We had just tremendous few weeks away, saw the kids, hung around, I had too much shortbread, and just really enjoyed ourselves.
Yeah, you know what? Same with us. We were down in our home in Arizona, hopped on our cruise for a week. So we were gone for just over 3 weeks. And then, of course, you come home, and we got home, I guess, last Tuesday, and the whole family was here, and half the whole family got sick with the flu.
Oh, no.
It's been a bit of an interesting few days, and I've been fine. I've been sort of moping around because everyone's sick. And I guess I kind of felt invincible. I said, nah, I'm not getting sick. And so I've been fine, but it's
Sure
been
enough.
like, I've been like a nurse around the house. So it's nice to get back to work
Good.
after a month off.
Yes.
And also knowing that we kind of really didn't miss much. I mean, it hasn't been overly active the last month. And so it's been a great time to cleanse the mind,
Yes.
see the family. And like yourself, on a cruise, I tend to eat tons of bread and butter. Must be the British blood in me. I love the rolls and I love the butter, and I just can't stop eating it. So I've been sort of trying to get back into the healthy food kick the last week.
Oh, yeah, nice.
Get my
Okay,
mind
good.
back. And of course, this morning, I went for my first great workout of the year, which was great. So getting the blood flowing again. And so, you got to get the energy level up because here we are. It's the first week in January. I remember like yesterday, and this is what happens when you get older. The years go faster and faster. But I remember sitting here a year ago having a similar conversation. We've just gotten through 2024, and we were very optimistic about 2025. Everyone was pretty optimistic until all the shit hit the fan in February, March, and yeah, it's like a massive train derailment. All the predictions and this and that went out the window, and 2025 became definitely a year for one of those years that we'll always look back on, right? Yeah.
Before we get into that too much detail, I just want to offer our standard disclaimers. We want to offer relevant, actionable information. That said, this is not investment advice, and we're better realtors than accountants, lawyers, and financial advisors. Full disclosure, we're owners of Vancouver real estate. We like it when prices go up, and we make a fee when we help you. So all of that to say, yes, our 2025 wrap up and our 2026 predictions hopefully will be more accurate than our 2024 wrap up and our 2025 predictions.
Yeah, no one could have expected what actually transpired early in January of last year as to what actually happened. It was quite a year. Like it was never a week that went by where there wasn't some other sort of news story or something else going on in the market that just sort of threw everyone for a loop.
Andrew, let me ask you this though. Do you think that not just the real estate market, but all the financial markets, have they priced in all that uncertainty and wackiness? Like, is it just sort of business as usual that crazy stuff's going to happen every other day?
Jeff, there's a huge disconnect because, Jill and I were talking about this last night. Real estate has been out of favor in a big way in the last year. But the stock market has been on fire. What a great year. If you were invested in the stock market in 2025, how could you not have a great year unless you were invested in real estate stocks or maybe utilities? But I mean, what a phenomenal returns. So, you've got one segment of the economy just firing on all cylinders. And then, of course, you've got real estate that was just completely out of favor. But that's what happens. That's all part of, it gets back to having a diversified portfolio. If you're sitting with different investments and this and that, you have to have diversification in your portfolio because at any given time, not everything's going to be firing. There's going to be certain things that are out of favor. And 2025 was the year where real estate was out of favor, setting people up that have money on the sidelines for tremendous buying opportunities going forward in the real estate segment. Whether that's going to transpire into gains in 2026, we'll talk about that today.
Yeah.
But I think, again, real estate is a long-term hold. So when you buy real estate, you shouldn't be buying it for a 3, 6, 9-month hold. It's a lot longer than that. But
for sure,
buying opportunities are becoming compelling. There's no question in the real estate sector. Stock market, Yeah, record highs. Like, wow, what a disconnect from the real estate segment. But that's the exciting financial markets, right? That's the world we live in.
Well, absolutely. And I think back to all the different market cycles in both the stock market and the real estate market. What tends to happen is when the stock market is doing great, we often see a knock-on effect where all of a sudden people think, oh, I've got some more equity now. Oh, you know what? I've got some more money now. And so
Yeah.
they'll come back and they'll trade up their house or, like you say, diversify. They'll put something into an investment. Whereas this time around, I don't really feel like we're seeing that. And like, try to find an investor who's willing to sort of take on one of these condos or, small multifamily projects or whatever. I think they're few and far between right now.
Well, and there's a lot going on that has deterred real estate investment, especially north of the border up here in Canada and in BC. A lot of government policy has sort of scared off the real estate investors. We've got the Cowichan land claim that came down the pipeline in August, which has really skewed the markets here in this neck of the woods. So there's a lot of things going on. Immigration is reduced to is been dramatically cut off in Canada. So we don't have a lot of that. And, I look around, Jeff, and it's unbelievable. I'm sure you're seeing it too. There's rental buildings in Vancouver going up everywhere. Every main street, there's 6-story buildings. There's that massive building at the corner of Broadway and Granville. That's 82 stories. It feels like it's 82 stories. Is that probably what, 40 stories? It looks like 82 because it's the only thing that tall within a 30-block radius. Like, it's so tall that where the old Royal Bank used to be. And I'm thinking, that is all rental. Where are these people going to come from to fill these buildings up? I don't get it. It's
Andrew, I was at Renfrew and Broadway yesterday.
Yeah.
Meeting a client. We walked around the corner from where we were meeting, and there's a development application sign up for 2,000 units in 4 towers, 39 to 45 stories. Like,
it's all rental.
Massive.
Is it all rental?
No, about 600 rental and about 1,400 strata condos.
And how does that get off the ground in the current market? I can't see how it gets off the ground because the pre-sale markets, we all know what's happening in the pre-sale market. Nothing.
Yeah.
And where's the demand for these rentals? I don't get it.
We're seeing the rents drop.
Yeah.
We'll get into that. I've got some good detailed numbers on that, but we are seeing rental rates come down. We are seeing higher than ever vacancy rates in Vancouver. In perspective, it's still not that much that there's so much available, but we are starting to see some loosening of that with all the new stuff that's been developed.
But when you factor in the cost of building and the cost of financing, interest rates might be going up in 2026. We don't know, right? Long-term rates anyway. Long-term. How do developers make these projects financially viable to actually move forward with them, right? I mean, we hear that, and it's a lot of just common sense. If they can't make any money, why are they going to go ahead and build? But anyway, we'll see.
Well, and the city's building another, 900 units on the old 2400 court site.
Which is the one, is that Kingsway?
Slocan and Kingsway.
Yeah. So I just, who's going to fill these places up? I don't get it. But anyway, rents are coming down. Real estate prices have come down, probably come down further. It's a massive reset.
Yes.
I guess a result of crazy appreciation that we saw from 2012 to 2022.
Since 1977.
Well, okay, fair enough. But I'm just thinking, and many of our listeners were probably not plugged in back in 77. I can remember when we sold our big home in South Granville in 2017, I just said, I don't see how these numbers are sustainable. We got to sell.
Yeah.
And that was kind of like the top of the market for that luxury high-end market. Yes. And then it dipped and it came back a bit, but then it's gone down again. And we're kind of back to what sort of prices are we down to on the west side? If you look at that market that's say 4 million plus, how many years have we lost in as far as appreciation? Where are we back to?
Do you know what? I think right now we're probably 2014, 2015 prices. So I
12 years.
Yeah. So there has been large lift in a lot of those homes. And even coming into COVID in 2021, 2022, and the market was just going bananas.
Yeah.
I think at that time we had eclipsed the prices of the 2016 peak before they put the foreign buyer tax on.
I agree. Yes.
But then since then it's fallen back down again. So, I mean, the prices are still as high as they've been in 50 years. Yeah. But we're not certainly at those peak prices of the early 2020s.
Yeah, no question. Okay. Jeff, I'm going to let you lead into it. I appreciate you gave me this phenomenal outline. I look at it and get a little bit dizzy with all these numbers, so I'll let you sort of lead into it. But it's
So you'll be happy to know I went back this morning and
okay.
reviewed it all and summarized it.
You spit out the numbers and I'll give you my read on things. How's that?
All right. That sounds perfect. So our 2025 wrap up and 2026 prediction. So number one, the first thing I want to talk about, most important, inventory levels. So ended December 2025, the active inventory, total homes on the MLS, 12,550. Now that's up 15% from 2024. And it's almost 35% above the 10-year seasonal average. So there is a lot to choose from right now.
And is that just the Greater Vancouver, or is that Fraser Valley as well?
And that's the whole Greater Vancouver. So not including the Fraser Valley.
So there's just a GVR area.
Yeah,
so
yeah, exactly.
35% above the 10-year average, a lot of supply.
Exactly.
And sales way under the 10-year average. Okay, so we got things going in the wrong directions here, but that's okay.
Now that's the standing inventory, but let's take a look at the number of listings that actually, like how many properties actually listed. And in 2025, just over 65,000 people listed their homes for sale. Now, a lot of those listings will be homes that came on the market, didn't sell, relisted with the same agent, maybe at a new price, or relisted with a different agent. So a
same
lot
property on the market multiple times.
Right. So
I think I was responsible for a few of those as well. Maybe not you, but definitely me.
Yeah, 10 or 15,000. So that's just over 8% more than 2024. Okay. And it's also 13% more than the 10-year annual average. I know that was certainly for us, going into the beginning of last year, all of a sudden we started taking a bunch of listings, and then we woke up in the summer. I can remember we were at a barbecue and we were talking about this, and we had about 20 properties listed for sale at that time.
I remember I said, Jeff, can you please share a little bit? But it turns out we didn't. I'm glad you didn't share, because a lot of those listings didn't sell.
A lot of them ended up expired. Yeah.
You can have them.
I actually last year, Andrew, as well as having a career high for the number of listings that I took, I also had a career high for the number of price adjustments to bring that into line.
Right.
It certainly was a year that was marked by large levels of inventory, lots of choice for buyers, and the required necessity to be very sharp on your pricing if you wanted to be a property that sells.
I kind of think 2025 was the year where sellers finally began to realize that prices are coming down. And if they needed to sell, they needed to really come into line with the market. I think in 2024 and prior, sellers were in denial and could maybe get away with being in denial and still get lucky. But in 2025, if you didn't come into line, you weren't selling. You were sitting on the market, unsold, frustrated, probably just taking your home off the market. But in order to sell in 2025, you had to adjust down in order to get to the market and get sold.
Absolutely. There was just no space for aspirational pricing, right?
Yeah. Yeah.
And we did see that, people that wanted to move and were prepared to make the choices to get moved. We saw a lot of properties come on the market, instant activity, lots of buyers. I can remember one particular house we sold this summer, and I think I texted you a photograph. It looked like a shoe sale at the front door.
Yes.
Lots of buyers in there, lots of offers, and got it sold in short order and moved on. But that's a result of well-presented, great product, and
at the right price.
At the right price.
Yeah, no, for sure. And I still think that is the case for sellers that want to sell if they come on at the right price. And we've had a few of these where it's been on the market prior. Andrew, we don't want to go through this again. We need to move because such and such is going on in our lives. Where do we need to be? Don't sugarcoat it. Just give us the straight goods. And when we came on at that correct level, like you said, you could have 8 or 10 pairs of shoes at the door and people actually, they're looking and getting serious about it.
And also, even if that's the best way to do it is just to come on at the right price to start. But even if you are making an adjustment, like you can be sitting on the market with very little action and, they're looking at you and you're looking at them. And by making sometimes just a small 5% price adjustment, it's like somebody flips a switch.
Yeah.
You know, like it's the buyers come pouring in all of a sudden. Oh, hey, I saw that listing. Oh, wow. Hey, let's talk about that and get in to take a look at it. So accuracy in assessing the market and a realistic outlook on the part of our sellers, that's really been the trick to ensure the properties get sold.
Just that little tweak can make all the difference. There's a tweak effect.
Absolutely. When we talk about sales, so I love all the media that's gone on around the number of transactions last year. Oh, the lowest number of sales this century, the lowest number of sales in 25 years. Yes.
Grabs attention, right? Grabs attention, right?
Yeah.
25 years or whatever. Like, wow.
I know. So 10% below 2024. The year-end total, we ended up with 23,800. And
what's the 10-year average?
31,625. So it's about 25% below that.
Okay. That's significant. Yeah.
Huge.
Yeah.
And when you go back, and I was looking at some of the really big years, like 2022, I think there was like 40,000+ sales that year. And I think, wow, oh my gosh, it was so happy.
It was lucrative to be a realtor in those days. Anyone could sell, right? It was just, it was frothy times, which you knew is never sustainable long-term. Things are going to shift, right? So here we are, we're in the shift.
Yeah. What's the old realtor's prayer? Oh, give me one more great market. I promise not to blow it this time.
Yeah. Yeah. I promise to spend more wisely. Yeah. No, get it.
Total sales versus the long-term average, like I say, it's off from what it's been. Now, what I did though, too, just out of interest. So I was hearing all this noise about, 25-year low in sales and that. So I went hunting for the key down years in Metro Vancouver residential sales volume. So number of transactions, not pricing. Okay. And we defined a down year where annual sales fell 10% or more from the year before.
Okay.
So what we found in the data, there was 5 big down years. 2008.
That was a global financial crisis. Yeah.
Right. 2018.
It's 2018. I can't remember. Was that just all the foreign buyers tax and all?
Exactly. Yeah. You remember the spring of 2016, prices peaked.
Yeah.
And then right after everybody called that, they introduced the foreign buyer tax.
Yeah.
Everybody went, oh my gosh, what's happening? And prices started to come down. 2017, very sort of in between year. And then 2018, it's like everybody went, oh, wait, maybe it was too high.
Yeah.
And
didn't they increase, but they also increased the foreign buyers tax too. Didn't they go from 15 to 20 or something? I think they increased further. And they put in the speculation tax.
Exactly.
Yeah.
So 2008, just to give you an idea of how much the drop was, 35% drop in the number of sales versus 2007.
Wow, that's big.
2018, 31% versus 2017.
Yeah.
2022, even though we had all this crazy pricing in the spring, the number of sales actually dropped almost 35% from 2021.
That was interest rates starting to go up. That was the Bank of Canada switching policy.
Yeah,
right?
Exactly.
Yeah. Okay.
And then 2023, we had about a 10% drop. 2024, and then 2025, now a 10% drop from 2024. So the data set that we've got, that's what happened in those years. And so what I wanted to check was what happens in the year after that. So there's been a bunch of things. 2008 was a classic snapback pattern. So after the 35% volume drop in 2008, 2009 sales rebounded by 45%.
It was dramatic. I remember that.
Yeah. And I can remember in the spring of 2009, half the business wasn't working because they just come through this thing in 2008.
Yeah.
And all of a sudden it was like every time you put a listing on the market, there'd be people there and the prices and it just everything was going bananas. So 2018, more of a stabilization.
Yeah.
So 31% drop and then about a 3% comeback. So basically flat. 2022 fell 34% and then followed by another down year, 2023, and then also leveling off then in 2024. So 2025, we're confirmed, definitely a down year, less sales this year than there were last year. And cumulatively, going back to the peak of 2021, 2022, we're down sales volume wise a lot more than what the 1 year number would suggest. But we're still seeing a record low number of sales in the last 25 years.
So this is a culmination of higher interest rates starting to really take effect, because it started in 2022. It took a while. Higher interest rates, dropping off of immigration, less immigration, government policy, and then, of course, all the noise south of the border that's basically put a wrench into our economy of potential. So a lot of things going on, some of them external, especially in 2025.
Yes.
That caused our market to contract and really erode buyer confidence and push buyers to the sidelines. Sellers scratching their heads thinking, okay, what do we do here? How do we navigate this? All of a sudden, our home that was worth $3 million isn't worth $3 million anymore. And we need to sort of, whatever. So a lot of stuff going on there, right? Yeah.
The segments, though, that were active, townhomes, we saw anywhere in that sort of 4.5 to 6 months of supply range.
Local market buyers.
Yeah.
Yep.
Apartments,
Same
7 months of supply.
Okay.
And detached homes were actually the weakest segment with 10 to 12 months of supply. Now, it doesn't mean it takes 10 to 12 months to sell your house, only that if no new homes came on the market, it would be 10 to 12 months before they were all bought up at the rate that they're being purchased. So we know more than 9 months,
buyer's market.
downwards pressure on prices.
Yeah.
Less than 4.5 months.
Seller's market.
Yeah. And 4.5 to 9 months, usually prices are sort of balanced to following a trend. So
one thing I wanted to throw in there, Jeff, mostly in the condo market, but I guess in the townhouse market as well. There's a lot of product, or there is product that's not on MLS, like a lot of the pre-sale product that's sitting there in the market, not sold, that doesn't get counted in that 7-month supply kind of thing. So if you add in all the, what do they call it, the shadow inventory?
Yes.
All the off-market developer, new product market inventory, then that pushes that number up probably considerably.
It does.
Yeah.
And it leads right into what you and I know by experience when, like, I'm looking at expired listings every day. And I'm also looking with a lot of buyers across all property types. And what I'm still seeing is that properly priced, well-presented, nice homes are still rare in the market and do tend to sell quickly. So when we look at that price movement and that, I hear this number bandied around a lot. Oh, we're 20% off from the peak. If I go back and I actually look at the numbers of how much prices are off, what I think is happening is that people are reading the headlines. Oh, down 4% last year, down 6% the year before, down 8% the year before that. Yeah. And they're just simply adding up all those percentages and they're saying that's how much the market's down. But it doesn't work that way. It's a reverse compounding. So 6% off this year, next year, 6% off, it's a smaller amount. So your cumulative total is probably in the 15% off from the peak, not the 20 or 25 that people are throwing around.
And keep in mind as well, the numbers that you hear are the average price drops. So what's on in Point Grey single family is probably a lot different than what's going on in Vancouver East, Collingwood, for townhouse duplexes or condos. So those are the averages. I think it's quite arguable that certain segments of the high-end market are down 20% plus.
Yes.
Go to Vancouver East duplexes around the Main Street area. What are they, down 5%? It's a different market. It's a different demographic that's buying those properties, just a different market. You have to sort of really dig into what's going on in the specific neighborhood.
For sure. I wrote down, Andrew, are there properties that are off 20% from the peak of the 21-22 market? Absolutely.
Yeah.
Are prices generally higher than pre-pandemic prices? Yes, they are. So if you're a buyer and you've been kicking yourself for not buying a house 5 years ago, the good news is you've got this great opportunity again to go out and get something.
Yeah. Interesting. Okay.
I want to talk a little bit too. You mentioned the pre-sales and the new product. So again, 21, 22, we saw rapid sellouts, minimal incentives, strong speculative demand, few assignments, pricing driven really by future price expectations. Last year, slower absorption, incentives were common. I want to say almost required.
A free Tesla. 2 years of no strata fees.
Yeah, fewer launches, more
Yeah.
assignments, standing inventory. Pricing was driven by current value and delivery risk. So when we look at buyers buying a pre-sale, what they were prepared to do was trade the risk of buying pre-completion for the promise of higher prices down the road.
Right.
And now their risk is lower prices down the road. And so what they're trading is they want to see it completed. They want to buy something finished. They don't want to sign up in advance to buy it. And you add that to speculators taken out of the market or people who are investing and thinking, well, it's going to be worth less in 2 or 3 years. Why would I buy it today?
Yeah.
That's where you see this radical, I want to say, miniaturization of pre-sale buyers.
Yeah. And there's also the risk of, it happened to a couple of our clients. You sign up for a pre-sale.
Yeah.
8 months later down the road, you get a letter. The developers canceled the project. And so they get their money back, no problem, because the money's safe, but it's the waste of time. And they were looking forward to buying something and closing on it in a couple of years, 2-3 years, only to see that the developer couldn't pre-sell enough units, couldn't get their financing. The whole project got canceled. And I had a client just reach out to me the other day and she said, Andrew, we're thinking of buying in this development. Can you take a look at it? I said, well, I don't know. It hasn't even launched yet. I mean, they're in the pre-sale phase. So it's not construction. I said, personally, I wouldn't do it. I said, because it may not even ever get off the ground. And so buy something that's built.
It's becoming more and more important too when you are looking at those. And this was part of a conversation I had last week.
Yeah.
The exact same thing. They were looking at a project built by a well-known, long-standing, reputable builder in Vancouver. And I said, you know what, this is probably fine. If you're talking about, just started, this is my third project, we're trying 120 units when we've built duplexes before this. There's a big risk there because you just don't know if it's going to happen.
Yeah. Yeah. And so your money gets tied up and then, 3, 6, 9, 12 months later, we've had a few clients that have bought in only to get their money back and the projects were canceled. So I'd prefer to sell something that's actually built or not, definitely not pre-sale. Anyway, that's just my opinion, but that market I think is going to stay pretty out of favor for a while.
I think so. Now, the good news is if it goes bad enough, we'll get into some undersupply shock down the road. And
2028, 2029, 2030, we could have a real shortage of new product. There's no question.
Absolutely. And we'll be lining up early with coffee.
Yeah. Well, if you and I aren't retired by then, there's no question in a few years, the conversation's going to be a lot different. There's no question.
Absolutely.
We'll have gone through this reset and the ship will start to righten itself and we'll be on our way back to seeing some price appreciation and a much healthier market environment. But we have to go through this whole flush out of the system first in order to get through it and then get back on solid footing. So nothing stays the same forever. It always shifts, right? And so
for sure.
Sunny days ahead.
So let's talk about rental development. We touched on this before, but I had some more notes here. We had almost 5,000 new rental homes completed in the city of Vancouver last year.
Okay.
Rental completions are up 60% year over year.
Huge. Yeah.
And also Vancouver is comprised 45% of all the new rental starts across the region. So we're seeing vacancy rates higher than ever. Although what that means is it's probably simply just more of a balanced market. When you go from a 1% vacancy rate to a 4 or 5% vacancy rate, that's just sort of a healthy level. The 1% is the way it's been for forever. And so I think people are used to that. But with that change, though, I would say rents are probably down, once again, depending on the building and the location, 10 to 20% for new rentals.
That's dramatic.
Massive. But also, there's still a really big gap between the new rents and the long-term tenancy rates, where people that have been in a rental for 5, 10, 15, 20 years in some cases, they've been so limited on what they can have their rent raised. They still haven't caught up to current market rents. And so they're not seeing the advantage of rates coming down. Whereas in some markets that we've invested in the past, like let's say the Austin, Texas market, on the pro formas that we used to look at, there would be this line item called loss to lease. And
Yeah.
David explained it to me. He says,
Yeah.
that's the discount you offer to people to sign up for another year on their lease.
Yes.
And I thought, wow, that like was just such a foreign concept to me. But I think on the new stuff, we might start to see that as the high rental rates of 2 years ago all of a sudden are being impacted. But if you're in a rental where you've been for 10 years and you're 30 or 40% below market rent, I don't think there's going to be an opportunity to go and say to your landlord, oh, I'll stay here for another year, but you're going to have to lower my rent. I mean, maybe there is, but
Well, not if they're
wouldn't
below
count on it.
market. There's no question. Yeah, if you're in a rental and you're below market, you don't want to move, because if you move, you're going to be paying market again, right? And so that loss to lease, and that's kind of like offering, say, a 3-month move-in allowance or something like that. Is that kind of what that is? So
That's exactly right. So
Yeah.
the situation would be you moved into a rental and you signed a 1-year lease and whatever you were paying. And then when the property manager came to you and said, oh, do you want to sign up for another year on your lease? Do you want to, whatever you want to do? Do you want to stay? Yeah, I'm happy to stay. You're going to have to reduce my
Fine.
rent by $100 a month or
that's becoming very common that south of the border where we have our properties in Arizona. There's a very soft rental market. Same thing.
Yeah.
5% vacancy rate. And on the new construction, because they're building rentals everywhere there as well, it's 3-4 months free rent when you sign
Wow.
up. Yeah, it's pretty dramatic. So
Yeah.
again, not trying to get off track, but so possibly going to see the same sort of thing here where you sign up for a 12-month lease and they're going to give you some incentive. In fact, I'm seeing as well now, you bring a friend in to lease a place, you get a $750 gift card or something. Again, everyone's hungry for the business, right?
Absolutely.
Everyone's trying to be creative, think outside the box to generate that business, to keep the cash flow coming.
Yeah. And so these new buildings, I mean, they're nice, right? I mean, they're, but they're,
And they're everywhere.
yeah.
I shake my head thinking, another one's going up. Like, who is going to move into all these places? I don't get it. But with immigration down and population growth, I don't think is happening. I just don't see who's going to fill these places up. But anyway, it is what it is, right?
But Andrew, here's the case in point for supply management to help with affordability. Now, I'm not saying it's solved because of this, but anytime you say there's an affordability crisis and prices come down 10 or 20% on rental, on whatever, that can only be good news for the market, for the community, for just about everybody involved.
Well, think about the building in Presale. It just got under construction right now. It's phenomenal. It's right on the bend going down the hill between 37th and 33rd.
Yeah.
We sold a house right across the road from it about a year or two ago.
Yeah.
That massive new building that's gone up. That site, I think, was comprised of 8 old, dilapidated single-family houses that were overgrown in weeds for years.
Yes.
Now it's a brand new 100-unit rental building. And you got to think, okay, that building fills up. You got 100 families or 100 people renting in there, or let's say there's more. They're going to be, each unit has 2 people in, so 300 more people. You're adding so much more population and vibrancy to the neighborhood. It's great. I mean, I totally get it. I mean, you've got this new building. It's going to attract 100 families versus 8 dilapidated houses that were probably all sitting vacant for years.
Yes.
You're making it more affordable. People can now live in Kerrisdale, rent a nice brand new apartment in a great location, and they're going to shop in the stores and they're going to eat in the restaurants. It's great. I mean, long term, phenomenal. It's going to add some vibrancy to the area, So I think it's phenomenal in many respects.
And I like to have high prices. That's where I'm at.
Yeah.
And I also recognize that if we want to attract young people, if we want to reverse the brain drain of people leaving for other opportunities in more affordable places, then it's just something that's going to have to happen.
You need to provide incentive for them to live here. There's no question. Not everyone can afford to live in Kerrisdale, free all these rental buildings, and fork out the kind of money that was required for a single family house.
Oh, for sure.
Very few rentals, right? So, yeah.
First-time buyers, 2025 was a great time for first-time buyers. 2026, I'm going to say likely similar, at least in the near term that we can see. Mid-2025 inventory was running 40 to 45% above the 10-year seasonal averages. So lots to pick from. And when good stuff does come on, you still need to act fast.
First-time buyers, many being financed by the bank of mom and dad. We saw a lot of that.
Yes.
It continues. parents using equity in their homes or savings or whatever to help the kids get into the market. Otherwise, it would be impossible for them to get in. Maybe they have the income, but they don't have the down payment. So
Yes.
bank of mom and dad helping. We saw a lot of that in the last couple of years. That probably continues, and that keeps that market pretty active.
One of the things that I'm touting this year as probably the best opportunity to do this in my memory is it's time to trade up. And it's not trade up for the sake of trading up, but if you're in a one-bedroom condo and you've partnered and you've maybe got some offspring or a dog, like whatever, if you need more space, now is the time to do it. The gap to trade up to the next level has never been smaller.
Yeah.
And I think the best way to do this, it's a little bit more unsettling from just sort of a personal comfort point of view, but I think it has the most advantage. Get your place sold first and recognize that even though it's probably less than what it was 2 years ago or 3 years ago, and maybe a little bit less, the gap to your next place is as low as it's ever been. So I think that's going to be the key trade this year, is going to be the trade up buyer for those that are willing to sell first and then go out shopping with cash.
So it's a leap of faith, but it's a great way to take advantage. It's one of those opportunities that exist in the current market, not just, buy now because prices are down, but trade up because the gap has narrowed dramatically. And I guess if you look at the in very average terms, if you're going to go up to $2 million and the price is down by 10, 15%, that's a $300,000 reduction there.
Yeah.
Your condo that's worth $700,000 is maybe down 60 or 70,000. So the gap has narrowed dramatically if you can make the numbers work. So
exactly.
Yeah, I've always felt this is a great opportunity in the current market. Trade up, take advantage of a down market, because the house that you're going to buy has also dropped, and probably dropped in more real dollars than your existing home.
Exactly. So those are probably the two big ones for me. In both of them, and like you say, they require that leap of faith that it's going to be okay.
Yeah.
The other side of it is, like, if you do need to sell, you don't want to you want to always just time your life. You don't want to try and time the market. If you do need to sell, we can help you do that. If you want to buy and get into your first place, we can help you do that and identify the best value for you. If you want to trade up, like I said, I think that's the trade, and it's really the thing to do this year. But whatever's going on in your life that precipitates a move or even a conversation, we're here to help with that. And we want to put our best foot forward to you to get the most value possible and really solve whatever that situation is that you're dealing with.
Jeff, how are you responding to people that are saying, because I've had this, Jeff, you know what? Let's take the home off the market. We'll relist in the spring when it's a better market. I think we'll do better if we wait till the spring or even the summer. We're going to wait till things get better. Obviously, at some point they will, but is waiting till the spring or the summer going to be to their advantage? Obviously, we don't know that, but how do you respond to that kind of comment?
I've always sort of taken a little bit more in the moment look at it, where I don't know what's going to happen in the spring this year. Other years, like if this was in 2001 or 2002, when there was zero inventory, we saw 25, 30% increase in wages, no market appreciation for 6 or 7 years. And now all of a sudden, everybody's sort of back and looking. If somebody said to me at that point, well, you know what, we're just not quite there with price yet. We think we're going to hang on. I mean, yeah, do it, like 100%.
Yeah.
But when we're in a market like we're in now, where it's probably flat, probably down,
At
probably
best, flat.
not going
Yeah.
up.
Yeah.
Will there be some more activity? Yes. Is it worthwhile to hold and risk further price declines on the possibility you might get an extra 1 or 2% on the sale price of your house? I always just say, like, look at what you're risking, look at what you stand to gain. And if that math makes sense, yeah, let's wait. But if it doesn't, renting or hanging on for 3 or 4 months, there's no short-term solution for those long-term issues.
Yeah.
And if you're already, 5, 6, 7 times what your purchase price was on your house, what are you really holding out for?
Yeah. The next 10, 15 grand or whatever. And at the end of the day, think about those people that made that decision to sell early as opposed to waiting. didn't make any difference in their life at the end of the day. They came out fine and got on with their life and were able to sort of move forward, right? So
Yeah. And I think back to like people that bought at market peaks. If you go back 25, 30 years and you see them, like nobody says to me, oh gosh, I wish I'd waited till 1979. I should have never bought in 1977 to buy this house. Oh, forget it.
yeah,
Like nobody ever had that
it
conversation.
didn't make any difference
Yeah, the same
in
thing.
the long-term scheme of things.
10, 15 years from now, you're going to have raised your family. You're going to have had a whole life. You're going to have nothing but happy memories of this house you bought in 2022. Well, yeah, okay. And it was great.
Yeah, it's fine. Most people, you and I are wired into the market, so we're always kind of thinking real estate. But most people, it's funny. They get on with their lives. They've got different careers. They settle in. They don't really think about it like you and I do, with like the average realtor. They get on with their lives. They don't even think about it. I mean,
They don't care.
Like, they don't care. They're busy. They're watching their kids grow up, putting them through college, this and that. They're traveling. They just don't care. I mean, you and I were wired in, but the average person, when they buy, they sell, they move into the new home, they get on with their lives. Yeah.
I couldn't have said it better. I know the first couple of times early in my career, like back in the early 90s, I would meet people and, you'd be having the conversation and, well, gosh, I see you need to sell the house. I'm going to move to this condo. I'm really excited about that. How much is my house worth? And they literally did not know, like didn't even have an idea. And you'd say to them a number and they'd be like, wow, really?
Yeah. Because they were tuned out, It's like you have a client and you sell them a property, or you help them buy a property, whatever. And for 4 to 5, 6 months, you're going back and forth, you're communicating. They're like best friends again.
Yeah.
You move into their home and they settle down. You follow up with them. Everything's good. And then you may not talk to them again for quite a long time. You might email on occasion a little market update and this and that, but they get on with their life. You get on with your career.
Yeah.
I did have a lady call me after 30 years. I talked to her in so long, I was too embarrassed to call her. And then we just lost touch. And she called me after 30 years, Jeff. She said, Andrew, I hope you probably don't remember who I am, but I'm so-and-so. You sold me a condo in Fairview in 1996. My husband was interning at the hospital at the time.
Yeah.
Well, here we are now, 2025. We're now both retired. And I went, oh my God, they're retired like crazy,
What's this?
And we're going to do something. Yeah, but it's like, everyone gets on with their lives, right? So,
yeah.
It's all good.
I remember one day I had a look of concern on my face at the office and David Andrews looked at me and said, Jeff, it's just real estate.
Exactly.
But
Take a deep breath.
Yeah.
Take a deep breath, go for a walk. I can remember one time at the office, Jeff, I guess I'd had a stressful week or whatever. And I got into my big SUV and I just drove to White Rock. I wanted to get on the freeway. I turned the tunes up and went for about an hour and a half drive. I came back. I felt like a new man. I just needed to go for a ride in the car. It was a spring day. I remember the sun was shining and it was just a beautiful, crisp spring day. And I thought I just need to get on the road and get away from the office and
get on that Tom Cochran.
Just fire up those tunes and don't sweat it. Right. So at this point now at our ages, we should know by now better that not to sweat the day-to-day stuff. It is what it is. Yeah.
And with that experience comes a great ability to solve our clients and listeners' problems. So feel free to call on us and we will be happy to serve.
Absolutely. 2026. Are we wrapping up here, Jeff? Have we got anything else to discuss?
I think I'm pretty clear. How are you doing?
Yeah, I just wanted to say 2026, a happy new year to everybody that's listening. We appreciate them. We love the comments. And whatever this year brings, I think we have to just be grateful. We live in a great city and don't watch too much news. That's all I can say. Don't watch the news. Life is pretty good.
That sounds perfect.
Okay.
Let's give it a wrap there and we'll look forward to the next episode.
Sounds good, Jeff. Cheers.
Thanks, man.
Thanks for tuning in today. We appreciate your time and your attention. If we can be of further help or information, we look forward to hearing from you. We respectfully acknowledge that we live, work, and play on the traditional territories of the Coast Salish people, including the Musqueam, Squamish, and Tsleil-Waututh nations.